So let me tell you about a problem you probably don't even realize you have. It's one where a simple, everyday purchase, like grabbing a cup of coffee, spirals into this really complicated tax situation. And yeah, we're calling it the Bitcoin coffee problem.
It sounds a little crazy, right? Could your morning coffee really mess up your taxes? Well, for a growing number of people in the US, the answer is, believe it or not, yes. If you're using certain digital currencies, that little morning pick-me-up could come with a whole mountain of paperwork.
And here's the heart of the issue. Right now, under US law, the IRS doesn't actually see Bitcoin as money. It treats it as property, kind of like a stock or even a piece of real estate. So what that means is every single time you spend it, you're technically selling that property. And that sale, well, it triggers a taxable event.
Okay, so let's break down just how wild and impractical this is in the real world. We're going to walk through a super simple transaction just to see how these rules actually play out.
So picture this. You buy a latte. It costs $4. You pay with some Bitcoin you have. It's a tiny everyday purchase. So far, so normal, right?
But here's the catch. What if the little bit of Bitcoin you just used to buy that coffee went up in value by just 6 cents from the time you first got it to the moment you paid the barista?
Get this. That tiny 6-cent gain legally requires the exact same tax treatment as if you sold a stock for a huge profit. You have to calculate that gain and officially report it to the IRS, all for a single cup of coffee. It's absurd. And it's pretty clear why this has completely stifled the use of Bitcoin for everyday stuff in the US for years.
Now, the good news is there's a really simple, common-sense solution to this whole mess. And it's not some brand new, radical idea. It's something called a de minimis exemption.
De minimis is really just a fancy legal term for too small to worry about. It's a rule that says, hey, if an amount is trivial, we can just ignore it for tax purposes to avoid these kinds of ridiculous administrative nightmares.
And what's really wild is that Congress has already solved this exact problem before. Decades ago, they made a $200 exemption for personal transactions using foreign currency. They basically acknowledged that the IRS shouldn't be tracking pennies every time you buy a souvenir on vacation. But for Bitcoin, nope, no such common sense rule exists.
And that brings us right to today, to what's happening in the 119th Congress. This is probably the best chance we've had in a decade to finally fix this. But lawmakers are split. There are two very different ideas on the table.
So in one corner, you've got Senator Lummis's bill. It's pretty broad. It suggests a $300 exemption for personal transactions using Bitcoin and other digital assets. But in the other corner, there's a draft from Representatives Miller and Horsford that is way, way narrower. It only covers regulated stablecoins, and this is the real kicker, it leaves Bitcoin out entirely.
This narrow focus on stablecoins was a real curveball. I mean, after years of talking about a broad exemption, all of a sudden, this new idea started taking hold on Capitol Hill to limit the tax relief, basically leaving Bitcoin users right back where they started.
Well, as you can imagine, this sudden shift really lit a fire under advocates who believe the exemption needs to be inclusive and, fix the actual problem for everyone.
The main group leading this fight is the Bitcoin Policy Institute, or BPI. They're a nonprofit think tank, and they've been working hard to educate policymakers on why a broader, more sensible tax policy here is so important.
And they have been busy. BPI kicked off a major advocacy campaign. They sent a letter arguing that a stablecoin-only fix kind of helps the people who need it the least. They've met with 19 different congressional offices, talking to both Democrats and Republicans, and the response has actually been really good. There's now serious bipartisan interest in doing this the right way.
But here's the thing. All of this is happening under some really intense time pressure. This isn't a debate that can just drag on forever. There is a very, very narrow window for Congress to get something done.
I mean, just look at this timeline. The target for getting some kind of legislative package passed is August 2026. As we get into the summer, you know what happens. Congress gets completely consumed by midterm elections, and the chances of passing complex tax law just shrink by the day.
And if that wasn't enough pressure, here is the final, hard deadline. Senator Lummis, who has been the biggest and most forceful champion for this issue, is leaving the Senate in January 2027. If a bill isn't passed in the next few months, this opportunity to make a common-sense fix might just vanish for years to come.
So that's where we are. And it really leaves us with a huge question. With that clock ticking and a key champion on her way out, will U.S. tax policy finally catch up to the reality of digital currency?
Or is something as simple as buying a coffee with Bitcoin going to remain, absurdly, a federal case?